Hey, good afternoon traders, hope you've had a successful trading day so far. So what's the latest in terms of oil? Well, we're now trading below $40 per barrel, which is interesting. On Tuesday we had penetrated just above $42 per barrel, so why the sharp decrease? Why is oil currently trading at around $38 per barrel? Where's all that bearish pressure coming from? Well, two main reasons. The first one being is EIA inventory numbers did show that there has been a build in crude inventories. And all that means is relative to demand, supply has increased in the market, so that's indicative of lower demand levels. And that in turn, due to less demand, is causing prices to go a little bit lower. And also the second reason being is the increasing headline news that we're getting in terms of there being worsening outbreaks across US states specifically, including Texas and California, and Texas the worst one being hit. And essentially the reason why that's had such an impact on crude prices at the moment is because US as an entity, as a country, is a very key player in terms of the production and the consequential consummation of crude oil products and petroleum products. So very key player in the oil market. So one thing to note is that Brent oil is now what we call in contango. And we've talked about contango and backwardation before in previous blog posts, but just to give you a recap, backwardation is a term used when people or entities that have oil stored up basically are encouraged to sell that oil because they can sell it at a premium. And so the ideology there is that people take out their stored oil, they sell it, and that in turn reduces supply in the market, and that causes oil prices to go higher due to less supply in the market. Now contango is just the opposite of that, so vice versa. So that's where people that have oil or entities that have oil believe that the price of oil will go higher in time. So what they'll do is they store that oil, they won't sell it, they'll store it, and they'll wait until prices are a bit more attractive and they'll sell it then. And that encourages people to store oil. And in turn, that means that overall supply in the market is higher, and therefore crude oil prices fall. So backwardation leads to oil prices going higher, and contango leads to oil prices going lower. So in terms of the way that then the markets measure kind of how oil prices are in contango or backwardation, well, this is all to do with time spreads. So if a time spread is above zero, it's a positive number, then we say that the market is in backwardation, so oil prices should start rising, and vice versa. So if oil prices in terms of time spreads are below zero, then we say it's in contango. So what is a time spread then? Well, with respect to crude oil or just general oil products, well, the basic way of putting it is it's the price of oil at a select delivery date versus that same grade of oil at a different time period. So for example, we can have an already set time spread. So for you to work out the time spread there, what you do is you'd look online, you'd look at the future contract prices of US crude oil. Let's just say we're looking at crude oil futures here. You'd get the crude oil future for August, whatever that price is, let's say 44, and then you get the crude oil future for September, and let's just say that's 45. So the time spread there would be 1. So you're just taking the difference there. And in that particular example that I've just given you, where the August value is 44 and the September is 45, well, we'd say that the curve is in backwardation because the value of the September crude oil is higher than that of August, and that is what backwardation is. If I had, for example, an August contract at 44 and let's say the September contract was at 40, well, then we'd be in contango because the differential between that would be -4. So that's what we mean by contango and backwardation. And if you ever read oil reports or listen to oil analysis, you'll hear these two terms being kind of put back and forth. But going back to the topic then, Brent is going back into contango after trading only 3 sessions in backwardation. So really that's indicative of there being real demand concerns in terms of basic supply and demand. And in terms of the outlook then, and what that means for you guys if you're particularly interested in trading oil, is in the short term, and possibly in the medium term as well, we're likely to see oil prices remain under some sort of pressure. So not really going to see any upside momentum, even if OPEC decide to have any more record cuts or can have sort of meetings and make other countries commit to making cuts in the future. You might get some short-term upside movement, but overall, unless the situation gets better with respect to COVID-19 cases, then oil prices will be subdued under that level of demand pressure. And as a result, we should be seeing ultimately lower oil prices to come, or at least trading roughly around these levels. So just do bear that in mind if you're trading crude oil, that we do have that COVID-19 geopolitical risk, which is really capping prices. But on the other hand, if the situation does get better, then oil prices would likely extend a nice rally higher, potentially revisiting that $42 per barrel mark.